All right, what is up, everybody? Divine Hood here, coming at you with another video update for today. So the Bitcoin crash continues. We are continuing to crash down in what looks like pretty impulsive price action. I mean, we kind of do have this slow channel, this like hourly channel grind to the downside, but we've just been bleeding all day, continuing to bleed all day. Now, we do have some interesting developments on the chart. First, I want to talk about this ABC correction. Now, before this B wave was even put in, you can go back in my videos and look. I've been talking about making a lower high to continue to do an ABC correction to the downside after finishing an impulse. I was expecting a sort of bigger correction wave. And we did reject. I've shown you guys this many times. We rejected from the golden pocket up here. It was also the back test of the ascending channel from November 11th to about the 108.4K all-time high. We rejected from that channel, and then we back tested it a few times, but this was our larger time frame back test. This was the top of our B wave here, and we started crashing impulsively to the downside. And that's important to understand. When we saw volume increasing on the dump and an impulse to the downside, we could expect this to be a bigger dump to the downside, and that's what we're seeing now. I know a lot of people were asking me about a possible inverse head and shoulders down here, like this being the left shoulder, this being the head, and then be possibly putting in a right shoulder at the golden pocket here. Now, a couple days ago, I was looking for a long at that golden pocket is because it was also our pitchfork band of support, but that didn't hold up. I think that was yesterday. It didn't hold up so well. We're continuing to dump to the downside. And now we have a pretty high likelihood that this ABC correction is going to continue. Now, the target for our ABC correction is down here at 87.3. We also have the daily, the last daily of this ascending channel. So if I come in here to, let's see, this ascending channel here, you can see the channel started around November 11th here, but our last daily support level, actually, it's not our last one. We have one here as well. No, that one was taken. Excuse me. Yeah, our last daily here that hasn't been taken, that's naked here. We have our daily resting right on top of that one-to-one target for our ABC correction. So I do expect this price action to kind of just continue down here. If we do, the A, B, and then the C wave is usually an impulse down, and it usually happens pretty aggressively. Looks like so far that aggressiveness is continuing, and we can just expect Bitcoin to kind of continue to bleed to the downside here. If we go to the daily time frame here, and let's look at the market cipher B on the daily, you can see here after making triple drives of bearish divergence all through this ascending channel, our money flow topped out around the 108.4K highs, and our money flow is just continuing to grind down to the downside. And one other important thing, and I covered this a few days ago in my video when we were hitting this golden pocket in the back test of this ascending channel, we were forming a trigger wave here. We were topping out on a trigger wave after daily bear divs were confirmed. And so for me, that was a sign that this whole move up here was a correction. Also, during this whole move up, we were seeing volume decrease the entire move up. I've talked about this in many videos as well. When you're seeing volume decrease on a rise like this, you can expect it to be more corrective price action rather than a new impulse to the upside to make new all-time highs. So we did come up to that golden pocket, which a common target for a B wave in an Elliott is between the 382 and the golden pocket. We did come up to that golden pocket. We did reject from it. And now we're starting our C wave to the downside. There's a couple things that happened today that are very interesting. So one of the things that happened today is just a couple hours ago, I'm going to zoom in here onto the hourly chart. We did get the swing failure pattern of the 91.2K lows. You see, I did say yesterday we came down here and we touched the 886 and we started to see a bounce. And I told everyone, I said, don't expect this bounce to create new highs. Usually when you come in to touch the 886, you have somewhat of a bounce, but you're more than likely to come down to take these lows here sooner than later, because when you come down that far and touch an 886, it's highly probable to come down to take the lows that the fib started from. And that fib pull was from these lows to the all-time high. We come to the 886 yesterday, hit it, saw a little bounce. Now, when we bounced on that 886, I'm going to turn on a channel here. We have this 1 hour descending channel. we've been grinding down in. Earlier today, we did have a fake out of that channel, but when we bounced from the 886, we came up to the top of the channel and we rejected from the top of the channel. We could not continue this price action. So if I zoom in on this, let's just go to the 24-minute here. You can see that this channel overall has been really respected. Now, I took this channel from these highs here to the next lower high, and I created this channel before all of this price action was started, by the way. I actually created it right around here, and that was the bottom pivot. Right after this bottom pivot happened here, I created the channel based off of this high, the next higher low, lower high, excuse me, and then this low here. And so we've just been continuing to grind down within this channel, kind of this slow bleed down here. The trend is still continuing to the downside. I talked about this in yesterday's video, how until we really can break this channel to the upside, we're probably going to continue down in this trend and just expect to grind down. And that's what happened today. Now, just a few hours ago, a couple hours ago, we did come down and SFP those 91.2K lows that I did talk about yesterday. It was probable to come take those lows because we hit the 886 here. We finally came down and SFP those lows. Now, this SFP was a pretty shallow SFP, and we got a pretty quick reaction right away. I don't like how shallow the SFP is. Also, if we zoom in here, let's go on to like the 6-minute time frame, and you can kind of see we're forming a little channel here. So if I go from the lows to the next higher low here, we bring it up to the highs, you can see we're kind of just forming a little ascending channel. I'll make that a different color so you can see this. But let's turn on the volume here and let's look at the volume of this channel. Look how low this volume is. From the low, you see the spike in red on the volume here. When we hit into the SFP, high volume spike of red. Since we've been pushing to the upside here in this 6-minute ascending channel, you can see volume has been decreasing the whole time. This tells me that this is a corrective wave before we get another new low to the downside. So I wouldn't expect much out of this bounce. We might reject again from the top of this, which the top of the channel near the top of the bigger steep descending channel. Eventually, this descending channel is going to give us one heck of a short squeeze, though. What we can do for local resistance here is we can do from the last local high up here down to this low. We can look at the golden pocket and look at that, you guys. Our golden pocket is at the top of the ascending channel. Now, it would be another fake out of this steep pink channel on the 1 hourly. But we also have these prior highs that are sitting here, like an internal liquidity grab right around here that we could be looking to take. So come up to like 93.3-ish. That could be a possible very local rejection zone to look for a rejection and continuation to the downside. If we break this golden pocket here, we might see a bit of a short squeeze. That's what this was today. Earlier today as well, we did see a bounce. We broke the bottom of the channel. We reclaimed it. We came and back tested it. I actually longed this back test here. And then we started pumping pretty good. Now, we broke out of the channel here, and we even came back down to retest the channel here, and I took a different long on a different site here, and that one didn't, I got stopped out on that one. We didn't make new highs there. But this entire move up here, if we went in, and I showed this real time in the Discord, if you go to your CVD here, your price analysis, let me jump in here onto the 5-minute chart. And if we're going to look at this price action here, this move up, you can see this move up. If I get this here, the entire move up here, if we look at this move up and we correspond it to the open interest on the charts, you can see that open interest, it was dropping the entire time. So what this tells us is this was a short squeeze. And actually, let's look at this CVD real quick. The CVD was going up. Now, the CVD is going up because people are being forced out of their positions. They're being forced to market buy their short positions, or they're getting liquidated, which is forced buy. A liquidation on a short is a forced buy. So we had our push up here. Our CVD was going up because of forced liquidations, but our open interest was going down, which was telling us it's not new positions coming into the market to pump the price. It's positions getting stopped out or liquidated, which is pushing up the price. Now, a short squeeze, they can be very volatile and they can push us up pretty quick. But a short squeeze, if new money doesn't come in to support that short squeeze, then we could drop right back down. And that's exactly what we did. Now, when we were back testing right here, that was the back test of this channel breakout right here. The reason why I longed this is I was hoping new money would step in here and continue to push the price up and see the big short squeeze, because eventually we're going to get a big short squeeze of all the people that have been longing. Oop, let get rid of that. All this price action here is going to get short squeezed real quick, because we have a lot of people shorting within here, and all of this is going to get short squeezed when we finally do break this channel with volume to the upside. So that's what you can expect when we start to break the trend. Now, it's highly likely that we continue grinding down to our, there's a couple levels I'll show you guys. So before I go into that though, actually I'll go into that now. So let me go ahead and hide this smaller channel that I just made, and I'll hide this golden, or I'll just get rid of that. So going back to the higher time frames here, let's go onto the 4-hour chart here. Let me get rid of this volume now, get it out of our way. You can see that our 87.3K is the ABC correction target here. And the way you get that target is you just do a Fibonacci extinction from the high of A to the low of A to the high of B. And that is this here, this target here. If I toggle that on and off, you can see that. So that is our target there at that 87.3 of this here, this correction wave. A couple other supports that we do have that I've been talking about in my prior videos for quite a while. We do have the 90.6K lows, the second pivot of this channel here. This pivot here, this low. Now this low at 90.6. We have not SFP'd that low yet. And then also, if we do our pull, our fixed range volume profile pull here of the entire range from November 11th to present day, you can see our value area low is down here as well, right around that SFP. So if we SFP this 90.6K low, 90.7K here, if we SFP this low, let me get rid of this SFP now. So you guys did see we SFP'd the 91.2Ks. So I'm going to get rid of that now. We SFP'd that. We're getting a small bounce from that SFP, but it's a small bounce on low volume. It looks like a correction, a little corrective wave up on a small time frame before continuing down. So we do have this SFP of 90.7-ish into the value area low, or the value area low is a little bit above it, but this general area is our first local level of support to be watching. Now, even if we do see a bounce from this, we can expect kind of the same kind of bounce that we're seeing now from the SFP that we're experiencing now. I don't expect it to be much. I expect it to maybe bounce to make a lower high to continue down to our ABC correction targets. So that we have this box here. It's our local box of support. And then another thing that I would like to show you guys, I'm going to hide this range now. So we have the value area low of that range into the 90.6K SFP. But usually when we see an ascending channel like this and we see a break to the downside, we like to flush all or a majority of the liquidity within this channel before making our move back up to the upside. So we have that daily at 87.3, which is also our correction target there. But we did have another daily right above that. And let me turn that daily on. That is at 89.8K. So if I go on to the daily chart here, you can see that we do have that daily right here that hasn't been touched at 89.8K. I'm going to zoom back into the 4-hour chart here. And we have the daily at 89.8K. And then we also have our big 382 right on top of that. And that 382 fib pull is a fib pull. Let me go zoom out back to the daily chart again. And our fib pull is from this low here, our last big low before this big last third wave of impulsive price action here on a smaller impulse to the upside here from this low here. So we could look at 1, 2, 1, 2, and then our third wave up. That 382 there is right around that 89.8K daily there. It's at 89.775-ish on Coinbase's chart. So that would be an area that I'm considering a level to bounce from as well. But for me, the highest probability is that we're going to come down to these 87.3K targets of the ABC correction. It would flush most of the liquidity of this ascending channel. It would be the technical target for our ABC correction, and then we'll see how it reacts when it gets there. So we have a couple levels of support in between where we might see like slow, little intraday bounces to make lower highs, then continue down. But I do expect this to continue to grind down, kind of like we have been here until we get to this target. You can see our daily time frame has a lot of bleed left in it. So maybe it's going to take 4 or 5 more days, maybe even a week or more to get down to this target. But it is highly probable that we do come down to this target here. Once we come down to this target, and if we do bounce from here and finish our ABC correction, then we can see impulsive price action to the upside and maybe possibly even make new all-time highs and go much higher. So I'm not bearish yet that the bull market is over. I just see this as an ABC correction after the finish of a 5-wave impulse, and then we might do another impulse to the upside. One thing I do want to talk about though on higher time frames, let me go on to the monthly chart here. And this is a little bit concerning to me, you guys. We do have monthly bear divs that are forming here. So it's just barely, but this momentum wave here is higher than this momentum wave. And this last monthly candle, look at this candle here. Like this is a typical topping candle here. And if this next month closes like a red candle near like 87 or even lower, it could be a much bigger correction to the downside. Now, when I talk about ABC corrections, we're going to zoom out here, actually zoom in onto the weekly chart, and we can look at the price action from the start of, from 16K, from the start of the bull market here. And if we just look at a 5-wave impulse pattern, I've been talking about this for a long time as well. I do think this could have been the end of a 5-wave impulse. So we have our wave 1 here, come to our wave 2. Our wave 3 is our most explosive and impulsive price action, and this was during the BlackRock listing and the BlackRock pump. Then we had our correction for 6-7 months here, came down to 50K, and our 5th wave could have been here at the top of that pitchfork. And I've been showing you guys that pitchfork was a really important pitchfork. Let me hide this ascending channel, get this out of the way now. So this could have been the end of a 5-wave impulse, and then we might be we're seeing a smaller like daily ABC correction target that we're seeing now. And here you can see that little one, but within that little one, you might see a big one, and a big one that could take like half a year or more. And I'm not saying this is the highest probability yet, but we need to keep it in our minds, because after a 5-wave impulse, you can see maybe an A wave target to the 87.3, a B wave, and then our C wave could bring us down to that 70K mother of all longs that Jason's been talking about, that I've been talking about, that everyone that understands price action's been talking about. So and this could last a few months. This could be another bigger ABC correction on the weekly time frame, and then we could see what happens from there. Now, I don't know if this is going to be the case. It's too early to tell yet. We still haven't even finished our smaller ABC correction that we're experiencing now. This is something we need to keep in mind, especially with the monthly bear divs that we're seeing. We also saw confirmed weekly bear divs, and those weekly bear divs were at the top of a very big pitchfork that's really important pitchfork here. This pitchfork from the start of wave 3 to the end of wave 3 to the correction of wave 4. Oftentimes the top of pitchforks can be the top of 5th wave corrections, and you guys can see. Let me hide this stuff that I just created now, and we'll zoom in here. You see we hit the top of this pitchfork. I'm going to actually just hide this bigger 5-wave impulse. We hit the top of it, perfect, and rejected. And it was also the top of our ascending channel on the daily from November 11th. So this is a possibility that we can see a bigger multi-month correction from here. It's not the highest probability yet. If we break 87.3K, so I'm going to zoom back in onto the daily chart now. Let's go back to this daily chart. I'm going to hide this pitchfork again. And if we go back to this daily chart, there's two common targets really for an ABC correction. You have the 1-to-1 fib extinction, and then the 1.236. There is other targets as well, but the 1-to-1 and the 1.236 are the most common targets there. Let's see, where do I got that 1.236? Here we go. Okay, and then If you do make it down to the 1.618, there's a probability that it is a impulse. It's the start of an impulse, because remember, an impulsive wave is sort of, you would have your wave 1, wave 2, and then if we shoot down with high volume all the way to the 1.618, it could be the third wave impulse, and then we could do 4 or 5 to the downside. That is a possibility as well, but right now it's not the highest probability, and our 1-to-1 target is our level to watch right now. We could even come down to 84K, which would SFP these lows at 85K, the very, very lows of this kind of range that we have here, the last big red daily candle before we had this kind of ascending price action to the upside. So if we have that into this 85 SFP into the 1.236, that's kind of a big distance though. You know, it's a whole $1,000, so it would have to be like some sort of crazy liquidation SFP, like, you know, something like this candle here, where you crashed really hard on the daily, but you bring it back up, or this candle here, or one of these candles here. So we do see it. Look, we've seen it a lot actually here on Bitcoin in the past couple months. So it's not improbable, but it is kind of a big wick there. So that's what I'd be looking for right now. We're going to just keep monitoring day to day to see how this goes, to see if we continue to grind down to our ABC correction target. We have our other intraday levels to be looking at. Now, if we do look at these levels, I'm of course going to try to long these levels if I see my confirmations come in, but I'm going to be expecting lower highs. So you play it as a scalp at first, and then you take profit quickly and you protect your position, move your stop loss to break even. And then if you get stopped out, it's still a winning trade. And speaking of that, I'm going to go into something later in just a second here, guys, about risk management, because I had a comment on my channel that I just wanted to go over with you guys. Because risk management is key. You can have the best strategies in the world. You can be given the exact targets, the exact take profits, and you can still fail to be profitable if you don't use proper risk management. And Jason actually talked about this yesterday on his live stream as well. Risk management is going to be the key to long-term success. Sure, if you're not using proper risk management, you can have some wins here and there. You can double your portfolio. But if you want to be a long-term trader and do this for a living, you have to learn proper risk management. It's really an important thing to learn, probably the most important thing to learn. And of course, learning how to do the TA and find the levels is also really important as well. But risk management is so key, and discipline to stick to your risk management is so important. That's one thing that Jason's helped me with tremendously in my journey. All right, so we're gonna now check out. We're gonna check out resistances to the upside if we do bounce from where we're at now. So I'm gonna zoom into the 2-hour chart. Looks like we are getting close to the top of that channel now. Let me check this out real quick here. Yeah, the way this is kind of forming this wedgie structure here, or like ascending channel structure, I would expect a rejection. You can see our VWAP close from just an hour ago is also around the top of this channel. So we might see something like this come up to here, reject, and then continue down. All right. So we have our descending channel, which is important. You can see that we have a lot of liquidity that's been building up through this entire channel down for the last 2 days here. Now, I created this channel from this pivot here, this first pivot here. So this pivot is important. This is where we would run all the liquidity from this channel if we do short squeeze up to this level. So we've got the top of our channel, SFP there, the liquidity at the top of the channel. But look I talked about this yesterday. It is also into the anchored VWAP from the all-time high. We have our anchored VWAP from the all-time high into the top of this channel. This is at 97,250-ish. So that is a level to be watching as a local resistance if we do short squeeze. Because if we do start to short squeeze all of this, we could see a very aggressive short squeeze. The way this has been grinding down like this, building liquidity, building liquidity, building liquidity, if we break it and see like a back test, and we could explode very, very quickly and just take all of this in like a 4-hour candle or even like a daily candle. So we need to be aware of that short squeeze that could play out. And if we do short squeeze all the way up to the top of the channel liquidity and we SFP into this anchored VWAP, that could be a rejection zone where we make a lower high and then continue down farther. Now, I'm not expecting that short squeeze yet because we're so close to the bottom of our ABC correction target. I at least want to see us come down to this 90.6K into the value area low of the big November range before we do that short squeeze. But the market doesn't care what you think or what you want. It's going to do what it does, and you just have to map out the scenarios, plan your trades. So this is what I'm going to talk about with risk management is if you're going into a trade, you plan your trade and you plan an invalidation for your trade. If you're wrong, you get out. That means you set a stop loss just so if you're not at the charts and you're wrong, you're out of your trade. You don't get liquidated. If you want to be a professional trader, you have to learn how to use stop losses. You have to learn how to plan your trades, and you have to learn when your trade idea is wrong to get out right away. Do not let the trade keep running. Do not have hopium that it can turn around. If your plan is wrong, get out. So I'm going to go over that in just a second because this is really important. But as far as this price action continues, we have this resistance to the upside, the SFP into the anchored VWAP. I'm going to zoom back out here onto the 2-hour chart. Now I'm going to go ahead and hide that channel that we just looked at here. I'm going to hide the SFP and I'm going to hide the 1-hour channel. And we're going to look at this price action that we've had for the past 3 days or so. We do have so this box I have here, which is the SFP into the anchored VWAP. So that's one local resistance that we're looking at. Another resistance we're looking at is if I go down and I turn on our volume profile from November 11th to current day, you can see our POC is right here in this box, but also it's going to be the fib retracement. Is that the one? Nope. All right, let's see here. This fit, okay, so if I do a fib pull from the all-time high from 108.4K highs to the lows that we just made today. So I just pulled, actually this is not pulled all the way to the bottom. There we go. And you can see here that this golden pocket is directly on top of the point of control. So if we do bounce here, this is a major resistance zone to be watching because we could continue to just do lower low, lower high, lower low, lower high, and continue the bearish trend to the downside. So we do have another major resistance here, this resistance here, which is our golden pocket and our point of control. I think I labeled it. Yeah, I labeled the inside of the boxes, but you can't see it if it's skinny enough. So I'll make that a little bit bigger so you can see that. So that is our golden pocket into our point of control there. And then actually, if we take that same Fibonacci retracement and we're going to change it to the 786. 786, you can see, is at the value area high, right next to the value area high there. So we do have our value area high and 786 price action that is right here. That is another resistance that I would be watching. There is the value area high into the 786, and that's around 100.3Ks, which is also around our prior highs. It's an important kind of support resistance flip within this area here, because you can see if we turn on our support resistance, like this was a support resistance, 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 resistance. It held the support for a while here. Now it's resistance again. So we do have to keep an eye out for that as well. That 100.3, 100.4 area is a level to be watching as another resistance. All right, so those are our 3 resistances that I'm interested in if we do see a short squeeze and pump higher. Now, very, very locally, I would just be careful shorting where we're at now. I wouldn't even look at shorting anything down here after this move. Because with local price action, as we saw the past couple days, even more major supports or resistances can get busted through an impulsive price action. So I'm not even going to go into anything other than what I showed you earlier in this video as far as local supports, because it's just so dangerous here unless you're using absolutely proper risk management and getting out when you know your trade is invalidated as a scalp. And I would play any short you do now, you have to play it as a scalp because we've already crashed so much here. So even if you're going to short the top of this channel, this VWAP close and this golden pocket from high to low here, you got to be careful here, because if we start to short squeeze, you can get liquidated very, very quickly, which is what happened to someone yesterday. And that's what I'm going to cover in just a second here. So we have local resistance here, but if you're wrong on this and we start to short squeeze up, you can get wrecked really quickly. So you have to, if you're doing local trades like this, plan your trade and have the invalidation. So for example, for this trade here, I would say, okay, I'm going to look at a short position here. I want to short the top of this channel and it's the VWAP close. If I break the golden pocket, I'm closing my trade. So I'm going to put my stop loss right above the golden pocket. My first take profit is going to be at the SFP into the value area low of the big range here. My second take profit, see, even that already is a 4.66 risk to reward ratio. But if you bring it down to the next one, you could do this, or you could bring it down all the way to the 87.3K levels, which would be a really nice trade, 11 to 1 risk reward ratio. But if you are wrong on this and it starts breaking above the golden pocket, you're wrong. You get out. You don't let your trade keep running. You don't let yourself get liquidated. This is super important to learn. You cannot, if you want to be a long-term successful trader, you have to have invalidations for your trades if you're wrong. No one is right 100% of the time. No trader in the world wins 100% of their trades or is right 100% of the time. So you have to have invalidations for your trades, and you have to learn how to get out of those trades when your plan is wrong. Okay, so speaking of that, I'm going to go into that real quickly here because a couple days ago, I got this comment here, and I blurred out who it was from, but this guy said, bro, you said huge support at 100.5K. I got liquidated and lost 60% of my total trading capital. Stop making videos. So I'm not picking on this guy. I just want to use this channel. Primarily, one of the reasons why I created this channel is to teach you guys, or just to show you guys how to trade, or how my journey of trading and how I've learned to kind of become a profitable trader and learn proper risk management. Jason taught this to me. I'm just passing it on to you guys. So I just want to show you guys that, okay, first of all, if you're using 60% of your portfolio in one trade, you're using way too much capital per trade. Professional traders usually use like 1 to 2% of their capital per trade. So if you're using more than 1 to 2% of your capital per trade, if your stop loss gets hit and you lose 1%, that's okay. You can live another day. But if you lose 60%, that's going to take you so long to recover from that it's not worth it. So you have to use proper risk management. So let's give an example of this here, you guys. Say you have an $1,000 account, right? I mean, most traders have $1,000 account. If you're risking 1% of $1,000, that's $10. Okay, so what we could do is an example for this. Let's go to this trade that he was looking at. So in this trade, this support that he was looking at, remember we were in this uptrend here, and our big range value area high from November 11th. So let's turn it on to November 11th here. We were looking at the value area high here at about 100.4K. Now it's changed a little bit since then, but it was at about 100.4K. So actually, let me just do that real quick. Let's do this. Let's turn this here. Settings, coordinates, 100, 400. So we're just going to make that 100.4K, and we're going to make that our value area high. Okay. Now I can get rid of this range here. All right, so 100.4K, that's about where we were at, and you can see that is right here. So what had happened is earlier in the weekend, we had our small range from December 24th. If we look at the range from December 24th to this pre-breakout here, do you remember that over the weekend, on a Friday or Thursday, we broke above it, we came back, and over the weekend, we came back to our anchored VWAP, and we back tested it, and then we pumped higher. So I was explaining in my video, I said, okay, guys, we did that over the weekend. We flipped this range to support and we pumped. Now we're breaking the bigger range to the upside. We broke the 100.4 to the upside and went all the way to the golden pocket. And we had no bear divs up here on the 4 hour, on the 1 hour, on the 2 hour. We had no bear divs except for on low time frame. So I was saying Bitcoin is looking kind of strong. We might continue up to 104, but we are at a major resistance that we need to be watching. I definitely wouldn't be longing up here. And in that video, I said the first local support, I also said it was our first local support, was the bullish back test of this value area high here. So if we do come in to back test this value area high, and actually we literally hit it to the dollar on the first hit of it. We hit it to the dollar, and we started on lower time frames. We started seeing a little bit of a bounce on that. And this was was it yesterday morning when the ISM data came out and the JOLTS data came out? So we came down to it, we hit it, and we started bouncing a little bit here. So it sounded like this guy longed the value area high here. Now, okay, you're longing towards the top of a major pump here. So if you want to do that, that's fine. If you think it's going to bullishly bounce from the value area high and continue up to 104, fine, you can do that. You can long the top if you have proper risk management. So if you're going to long that, you're going to put your long position. Say he didn't long the exact bounce of it, but say you got in like, let's say you got in after a minute or two here, and you start to long. Actually, let's say you long on the back test of this candle right here, this first dip. You see it dipping a little bit, you get in on your long, and then you're take profit. You plan to take profit at 104. So like up here at 104, right? So then now, if what if you made a plan, you should have a plan to get out if this is wrong. If the value area high is not going to hold and we're going to dump straight back into the range, value area range, then you're wrong on your bullish back test and you need to get out of your trade. That's your invalidation. So what you would have done in this case is you could have put in your stop below the low that was made on the bounce, the first bounce test, or you could have just dragged it a little bit into the value area, because if we're going to dump back into the value area, then obviously we're wrong on our bullish bounce of the back test of the value area. So you would get out of your trade. You would set your stop loss on your exchange. Set your stop loss here. So even if you're not at your charts, even if you're not at your computer, it'll stop you out and you'll lose 1% of your trade. Now, in order for this to happen, say we had a $1,000 account, right? Our stop loss here is going to be a 0.43% stop loss. So that's quite a short stop loss. That's a really tight stop loss. But if you have a $1,000 account, so what you can do here, let me get out my calculator here, because what you want to do is if you're risking 1%, so that 1% of $1,000 is $10, right? So you do your $10 divided by your stop loss percentage. And our stop loss is 0.43, or it's a 0.5%. Let's say it's a 0.5%, right? So your position size on this could be, because you do your 1%, which is $10, $10 divided by 0.43, you have your your position size. You can get your position size from this, actually. So if you have a $1,000 and you only have a 0.5% stop loss, that means you could put $2,000 on the trade. And if you drop and you lose the 0.5%, because 0.5% is 0.5% of $1,000 is only $5. 1% of $1,000 is $10. So if you have the 0.5%, that means you could throw up to $2,000 on this. So you could use 2x leverage and leverage your entire portfolio on 2x. And then if you get stopped out, you'll still only lose 1% of your portfolio, because you will have a 0.5% stop loss. So you have to make sure that your risk management is on key. The important thing to understand, though, is you have to have an invalidation for your trade. If you think it's going to come down here and bullishly backtest this value area high and continue upwards, great, that's fine. You can have that bias because we didn't have bear divs there. It kind of looks strong through this range here. This SFP was very concerning that we saw, so that could have been a signal that, in hindsight, we can't be a Monday morning quarterback here. But okay, so you have the trade plan to long the bullish backtest of the value area high. If it's wrong, if we dump back into the value area, your trade is wrong. And we even saw this. If you zoom in real quick, real low time frame here. Now you'd probably have to be watching the charts to see this happen here. Let me get to where I'm supposed to go to. So if we come here and we come to this area here, let's zoom into the 3-minute chart. Let's see here. All right. Let me get all the way up to here. All right. So if we have our first initial bounce here and we longed right here, our stop loss is we're going to give it a little bit of breathing room below here, but you can see we came down. You could have even waited. You could put your stop loss below like this first red wick here. Now at that point you'd be starting to lose this, but you had a chance to get out. You saw that once it started dropping into the value area, we came back up. Let me get rid of this so that you can see what I'm talking about. So we dropped into the value area. We started pumping again here, but we were still in this kind of bearish trend on very low time frames here, and you could say, okay, we're not bouncing. It looks like we're going to drop into the value area. I have to have an invalidation to get out of my trade here. So once we came up here and rejected, you could have just closed it in small profit, or you would have had it. You would have had a stop loss really below this low, or depending on when you set your stop loss. Ideally, you set your stop loss right away. Set your stop loss at your trade invalidation right away, so that if we do get an aggressive dump like this, you don't get liquidated. Now, the fact that this person lost 60% of their portfolio means they were using way too much, way too big of a position size anyways. They were gambling rather than trading, and it's a tough lesson. I feel bad for this guy. I don't, when I give these targets, I also said in that video, it was our first local support. And I did say afterwards, there is a possibility that we could dump back into the value area and continue trading within the value area. I also said in that same exact video that my highest probability was still that this was the top of a B wave and an ABC correction, and that we were going to continue down. I talked about that. So, and I talked about how on that whole push up, we were seeing low volume decrease as we were pushing up, so that it was probably a lower high coming in before we made new lows. So if you have this trade set up here, you bounce here and you start to see something like this, you have to set your stop loss down here just in case you get stopped out. Now, say we did have that long position here. We put the long position like here, and then we came down. Like, I probably would have set it below these lows, gave it a little bit of breathing room here, and then we would set it up at 104K there for our next TP. You come down here, you would have already got stopped out on this wick right here. Okay, you're out of your trade. If it recovers again and then back tests again, you can try to re-enter. Just, you got to have an invalidation for your trade. That way, and this was also right when the JOLTS and the ISM data came out, and that's why we just had this big impulse to the downside, because we had bearish news that was the catalyst to push us back down into that value area. But you have to set this invalidate your stop loss at your invalidation if you're wrong. That way, if you are wrong, you get out of the trade. You don't lose 60% of your portfolio. Now, the second we started dumping in here, if I was that guy and I didn't set a stop loss, the second we started aggressively dumping in here, I would have hit flash close on my trade right away. You cannot sit in that trade and let yourself get liquidated because you have hopium that the price is going to reverse. Once you start to see impulsive price action to the downside with increased volume, much increased volume on this dump to the downside, you say, oh my gosh, I'm wrong. I didn't set my stop loss. I'm getting out now. And you get out now. You'll take a loss. Sure, you're going to take quite a big loss depending on when you get out, but it's better than getting liquidated. Ideally, you should never get liquidated if you're using stop losses and proper risk management. You should never get liquidated. Also, your leverage doesn't matter. Your leverage should depend on your position size. Really, so like in the case of this trade that I was talking about, because you have a 0.5% stop loss, that means you could 2x your portfolio, because if you had a 1% stop loss, you could throw your entire portfolio, and if you lose that 1%, if you hit your 1% stop loss, that means you lose 1% of your account. If you have 0.5% stop loss, that means you can 2x your whole portfolio. And if you hit your 0.5% stop loss, you'll lose only 1%. So that's the way leverage works there. You're not using leverage as like, if you have $1,000, you can put $10,000 on the trade and then pump up. I mean, that's you. If you put $10,000 on the trade, you would have to have 1/10 of a stop loss. So a super tight stop loss. So you just got to be aware of how to use leverage. I feel for this guy. Obviously, he didn't understand that. And listen, man, if you're still here, I hope this video helps you. I really do. I'm sorry that happened to you, but it's not my fault. Sure, I gave you that as a local level of support to be watching, but I didn't tell you to long it. First of all, you were the one that clicked the button. I didn't tell you to long it. And also, you should have a trading plan before you even take any trades. You should have a plan, the trade already planned out, and the invalidation for the trade, if you're wrong, already planned out. So I hope this lesson helps everyone. I want everyone to understand that if you want to be profitable long-term in trading, you have to learn risk management. It is the key thing to learn. You can have exact levels. You can have exact support levels. You can have all these things. But if you're risking too much, you can win 20 trades in a row. But on the 21st trade, if you long it 100x with your whole portfolio and it goes against you, And even if you flash close it at 0.5% stop loss, you're going to lose 50% of your portfolio. You just negated the 20 wins in a row you had because you used bad risk management. And listen, I've had to learn this the hard way. I have burned more accounts than I care to talk about because for the longest time I didn't understand risk management. And that's where Jason Casper really helped me. God bless you, Jason. Thank you for that. And so, I learned really good technical analysis from Bitcoin Hyper and from Jason Casper, but really I learned how to actually be a trader, uh, like learn proper risk management from Jason. And so, what I would implore you all to do is to understand risk management, to understand what risk management is and why it's so important, to understand if you want to be long-term trader in here. You shouldn't be risking more than like 1 to 3% per trade. And when I'm talking 3%, you better be pretty dang confident that trade is going to play out because if you lose 3%, then the next one you might have to win a couple more trades to make that back. See, the thing is, if you have a 50% loss of your portfolio, then you're going to have to make over 100% to just get break even on that. So, losses can hurt, especially if you have big losses like this. You have to learn how to use the proper risk management and trade your plan your trades. The other part of trading is not just risk management, but it's the discipline to stick to your risk management. And that's where Jason really shines. He's an expert at it. He has discipline. He does not add to his trades. Very minimally, he adds to his trades because he had such good entries. He understands, how to just TP1. So psychology is a big part of trading as well, guys. A lot of people get FOMO. I know earlier today in the Discord, a lot of people were getting FOMO when we were doing this short squeeze to the top, and especially when we broke the channel. I was even feeling some FOMO. I said, I don't want to miss out on this short squeeze. That's why I tried to long right here. But guess what? I had an invalidation on my trade. So, for instance, on this trade that I took earlier today that I got stopped out on, I'm okay getting stopped out on 1 or 2 trades a day if they're scalp trades because I had the proper risk management for it. So I tried to long this back test and I literally longed it the second we hit the channel because I thought we were going to pump. And then I was going to have my TP1 there. Yeah, I was going to go all the way up to the anchored VWAP for my major TP, but there was a TP1 that I was looking at before that. I think it was the SFP of this high here at 95 3-ish 90. Yeah, that was it there. You can even look at my post in the Discord if I was talking about that. So but then what did I do? Because I had such a good entry on the back test of the channel, I told everybody in the Discord, listen, if we go back into this, if we dump back into this channel, then we can continue to grind down. It's a fake out of the channel. So I put my stop loss literally pretty much right underneath it. My stop loss wasn't even 1%. It was like a 1/10 of 1%. So when I got stopped out, it wasn't a big deal to me because it's okay. Guess what? I was wrong on that trade. I got stopped out, move on to the next one. But because I had my proper stop loss in place, I didn't even have to be looking at the charts. And when we pumped up for a little bit, we made that lower high. Actually, we were seeing some bearish CVD in here. And so the second I saw bearish CVD between this high and this high here that we were making, I should have closed it right there and took a 0.25% profit or whatever it would have been. But I didn't. I left it open, just like yesterday's trade at the golden pocket and the pitchfork band. I took a long there. My first one, I hit my TP1, then I got stopped out. My second one, I lost it, but I lost it, and it was not that bad because I had my stop loss set properly, and I lost 1% on that trade. Okay, cool. You know what? I also took a couple shorts today, and they're scalp shorts with proper risk management, and I'm up more than 1% on the day. So you have to have proper risk management in these things, you guys. Just make sure you're using proper risk management. Make sure you have the invalidation for your trading plan. Also, what you can do is you can wait. Like, for instance, this trade here earlier today, and we were looking at it on the 1 minute time frame. I can go into the Discord and I can show you guys the screenshots that I took and was walking people through this. But when we lost this channel here, and even on the 1 minute chart, I said, okay, guys, if we come back up into the channel and back test it here, we could pump. So we came up here, we back tested it, we got the confirmation. You can wait for a confirmation and like also look at on the 1 minute time frame, we started doing a bullish market structure. So if you make a higher low on bullish market structure, if you long this here and you're planning even to take it to the midline, actually that's exactly what I said in the Discord. Let me go into the Discord and let me show you guys this, because I told people if you long this, TP1 is at the your TP is going to be at the, let's see, your TP would be at the midline. And I talked about that. So for instance, right here, this this one right here. I said, okay, guys, we're looking for the back test here. Our TP is going to be at the midline, and then we could see the continuation down. Now, actually, this was the SFP. That was the second time we did it in the day. But there was a time earlier in the day right here. Actually, this is altcoin stuff that I was looking at for some people. I did a lot of posts today, so right here. All right, this was it, and this was at 10 o'clock in the morning my time. So we lost the channel. We pumped back up onto it. We hit into here. We long this here, and then I was saying, okay, look, if you do long that, let's see, it was somewhere in here. It was right before the short squeeze. So actually, this was after the short squeeze. Sorry, that was the wrong one. Here it was right here. This is what I talked about after we had longed it here, and I took TP at the midline because it was also our local golden pocket. But I talked about it way before right here. So this was at 7:33 a.m. my time. We had dumped and lost the channel. I said, okay, guys, if we come back and we back test the channel, even on the 1 minute time frame, I'm going to long this, but my TP, and I showed, look at the midline is in alignment with the golden pocket. It was also our prior lows here on the 1 minute time frame. So my TP1 is going to be here, and then you move your stop to break even, and then you're in a winning trade no matter what. So, and I walked people through, I walked them through this, like that local golden pocket is going to be important to break. Move up to the midline. See, when I showed this here, so after we hit here, we longed here. I was talking about this being our local level. This is a scalp trade because we're in a bigger downtrend. You can leave some to run just in case it explodes to the high side, just like Jason does, and Jason taught us all. But you have your stop, you long here. So if I would have longed here, so let me go back to this now. If we were here and we break back into the channel, so I think, okay, we're reestablishing price action with a channel, maybe we can come to the top of the channel. I long here. What are you going to do if you long here? You're going to put your stop loss right below these lows because if you're wrong, you get out. So you put your stop loss there. It's a 0.5% risk right there. Stop loss is 0.5%, roughly 0.5% risk. Then you bring your TP1 up to the midline there. Now that's only a 2-to-1 risk reward ratio, which isn't the best risk reward ratio. But what I do on scalps like this is I probably wouldn't set my stop below these lows. I personally say, okay, if we lose the channel again, I'm wrong. It's probably going to break to the downside. So I actually set my stops below, like I give it a little bit of breathing room, but I set my stops below this because if we break out of the channel again, then it's probably going to continue down. So this is what I do on scalps, how I play them throughout the day. And these might only be hour or 2 hour trades, but you have to use proper risk management. And you have to set your stop loss on that. Because my trading plan here was if we reclaim this back within this channel and we back test this channel, we can long the back test of the channel and bring it up to the midline. That's a scalp play. That's only what that took, minutes to play out, But I said, okay, we'll do that. That took what, like, 31 minutes to play out, 30 minutes. So you long here, you put your stop below there because if we come and we break the channel again, you're probably going to continue lower to your next level of support. This was the SFP, by the way, of the 91.2. So we SFP'd. So we had a reason to be bullish here because we did SFP and we confirmed the SFP. You can see these 3 wicks here. 97,271 was the SFP level. And we SFP'd that. So let me go to this real quick here. This was our SFP at 97,271, right here. Oh, not that. There. Let me go back onto that 3-minute chart here. Okay, so the context of this trade here. We SFP'd, so okay, if an SFP works, usually we can at least see a decent bounce off an SFP. Even if we're expecting a lower high to come in, we can see a decent bounce, and you can see we're still bouncing from that SFP. Now, this is starting to look really weak in here, but we did see a bounce. So, okay, I didn't catch the SFP. Actually, I was doing altcoin TA for someone that asked about it in the Discord, and I was looking at XLM, and so I missed this. My alert did go off, though. I did have an alert there, so I checked it out. I said, okay, I missed it. We're coming back into the to the channel. I'm going to long the back test of the channel because I do think this can give us a bit of a move up, which it has. And so I longed the back test of the channel. I even posted about it. I said, boom, you know, let's see here. Not that. Here. Let's go to the first page here of today. Okay, so right here, boom, got it. Because I was saying that if we come down to the bottom of the channel, we pump. So when we did come down to the bottom channel, it happened faster than I drew, but I was watching for that to happen. Boom, we got to the bottom of the channel there. I longed that there, and then you take it up, you know. But if you're wrong on that, your invalidation is going to be dumping out of the channel again or losing that low that you longed. That way you can protect position pretty much right away. You do a TP as soon as you get to your first local resistance, you TP there, and then you set your stop to break even. Now the trade is good. Now I think I still have I did set my stop loss here, I think. And we're still rising here, but I probably should look at closing, taking another take profit here. So I'm going to end the video actually pretty quick here. You guys, a couple of you asked me to do TA on some altcoins. I have to leave in about 15 minutes. So when I get back later tonight, I'll do some TA on some altcoins. I'll do XLM, Super, and gosh, there was another one. I'll look at, there was a couple that I'll do altcoins that I'll do some TA on. So I hope this video helped you guys. I hope you understand how important risk management is, how important planning your trades are, and sticking to your trade plans. If you're wrong, you get out. You don't keep riding until you get liquidated, or you don't keep riding until you lose 30% of your account and flash close it then. Have a plan, trade the plan, stick to your plan, have discipline to make plans and to trade the plans. Now, a lot of these plans that I made today, I didn't plan this before the day started. But real time, based off price action, I came up with this plan in my brain because I saw, okay, we SFP'd. Now I understand how price action works. If we break back into the trend and we back test the trend and confirm it to support, then I expect higher. So I made this plan up off the fly, but it was still a plan that I made up and it still had an invalidation. And when I entered here, I knew my invalidation right away. I also knew my first take profit right away. I didn't know my final take profit, but I knew my first one. And so I said, okay, I'm just going to do that. And then once you hit your TP1, you could TP1 50% here. This is what I did. I TP1 50% here. And then you can move your stop. Now you move your stop to break even, and it's a risk-free guaranteed win. So if you do come back down and get stopped out, and I actually might have got stopped out. I got to check that. I haven't checked it. So so then you're on to the next one. It's a winner. You're on to the next one. But risk management, planning your trades is key. Let's check this small channel out again, and let's see how this is going. Yeah, you guys, this looks really weak in here. This looks really weak. This looks really corrective. God, look at that low volume there. I think this is probably going to do a dump to the downside. It looks like it, and we might kind of slow grind up to the top of this channel and the VWAP close from a couple hours ago. But that doesn't look too strong. Anyways, even on scalps, even if you can plan your scalp right before you get into it, because obviously you don't know what price action is going to do during the day. But if you see an opportunity like a reclaim of a level and you want to long the reclaim of the level, then okay, you long the reclaim of the level, you put your stop below the nearest low to invalidate that, because if you're taking the low, then your trading plan is wrong and you get out. And that's the same case with this guy who longed 100.4K, the back test of this range here. Okay, that's good if you want to long this because you're bullish and you think we're going up to 104 because there was no bull divs. I actually thought that as well. You want to long this, that's okay, but make sure you have an invalidation for your trade, and also make sure your TPs are planned out as well, because a lot of people, it'll pump up to resistance and they don't TP, and then they write it right back down to a zero or a negative position. So learn to take profit out your TPs. Don't get greedy. If you plan a scalp trade like this trade that I just did here earlier, I planned this scalp trade. I said, I'm taking some profit at the midline. If we pump to the midline, I'm taking some profit. Well, guess what? When we got to the midline, I actually had a limit set there, a limit take profit set there. So I didn't even have to be looking. But the second we came to this midline, it took profit for me. And there you go. You know, it's a winning trade. So just make sure you guys know that this video is super important. To understand this is super important. So I hope I taught you something, or I hope you learned something here. I don't want to act all arrogant like you guys don't know this or anything like that, but I just, when I get comments like this, it sucks. I hate that this happened to this person. I don't like that this person's blaming me or, whatever. You know, I guess you'll see that as a YouTuber, but and I even talked to him about it. I said, listen, in every one of my videos, I talk about using a stop loss and proper risk management. I said that was our local level of support in that time. In the video, I did say we could dump back into the value area and go much lower. I also actually said it was my main probability. You should always have an invalidation for your trade. If it's wrong and it's invalidated on that idea, then you get out. My comment keeps going, but I cut it off. So, anyways, hope this helps. Everybody have a good day. Thank you for tuning in. Let's just continue to watch Bitcoin. I think we are coming lower. 87.3 is our major level that I'm watching for, but this 89.8 into the 382, this is another really good level to be watching here, because we could bounce into the 382 and then front run that 1-to-1 target. That now I got this idea from Dewalt, who's in Andy Bitcoin Consensus. That guy's an amazing trader. Shout out to Dewalt. I was watching one of his live streams, and he thinks that, let me go into this real quick. He thinks that this is a fourth wave correction of something like a smaller, this is a 1-2, 1-2. This is our third wave here. This is our fourth wave correction, and then a fifth wave up. So he's thinking the 382 is going to bounce, and we're going to front run this. And everyone's looking for an ABC while he's looking for a fourth wave. So we might hit that and continue higher. Now, I don't think that. I think this is an ABC. I think this C wave is confirming for us with this impulsive price action to the downside. I do think we're going to come for 87.3K, but I understand that that's a valid count that Dewalt's got on there. It's a valid support level because we have a daily and a 382 there. So I will look there for a long, and I will look there at least as a TP. I set a TP for my short there just based off of that, but I think it's only like 10 or 15%. So, all right, I'm gone for real this time. Love you guys. Peace out.